Hey Team Crypto, welcome back to another episode of the news. Today we're going to start off by going over goteamcrypto.com. It's our website, yay. This is where you'll find all our intro videos and some freewheeling where we go in and talk a little bit about some cryptocurrencies and accounting, managing accounts and things like that. Team Crypto YouTube page. This is where you'll find all my videos, news with Team Crypto, and you'll also find some of Dave's videos where he'll show you how to add Avalanche to MetaMask. Guys, today the Fear and Greed Index is greedy. We are sitting at 56. If you remember, just last week we were sitting at 26. And last month also 26. So to see us go from the 30s to the 60s it's healthy. It just shows that the bull market might not be as bad as we may have thought it was going to be. So for news today, looks like there is a lot of people that would like to see Bitcoin go from proof of work to proof of stake. So what that will do is there will be a hard fork or a soft fork, some type of fork that would allow Bitcoin to do just like Ethereum's in the process of doing, where it switches from proof of work over to proof of stake. What that will do is reduce energy costs by nearly 99%. And I think, gosh, it's so hard to have an opinion on this. Changing the code from proof of work to proof of stake would, I tell you what, how about we do a little reading and we go from there, and just everyone can kind of have their own opinion on what would happen. So we'll start off here. Several environmental groups, including Greenpeace, Environmental Working Group, as well as local activist organizations, have formed a consortium to launch a campaign highlighting Bitcoin's environmental impact. Per Bloomberg, the initiative, called Change the Code, Not the Climate, will see the consortium run advertisements in major media outlets such as New York Times, Politico, and Wall Street Journal. The goal is to persuade the Bitcoin community to modify the network's existing code and remove the proof of work consensus algorithm, which requires miners to solve complicated problems to validate transactions and issue new currency, in favor of less energy-hungry proof of stake mechanisms. According to Cambridge Bitcoin Electricity Consumption Index, the Bitcoin network uses about 136 terawatt hours, which is more than Norway or Ukraine. In 5 years, Bitcoin may consume as much power as Japan, Chris Larsen said in an interview with Bloomberg. Ethereum, the industry's second largest cryptocurrency, is currently relying on proof of work also. However, it is in the middle of switching to proof of stake, which according to some estimates, could result in a 99.95% reduction in total energy use. According to Chris Larsen, should the leading cryptocurrency make a similar move, which will require either a hard fork or a soft fork, it could solve the leading cryptocurrency's alleged power consumption issues. Now with Ethereum changing, Bitcoin really is the outlier, Larsen told Bloomberg. Some of the newer protocols like Solana, Cardano are built on low energy. Larsen also denied that the Change the Code, Not the Climate campaign is anti-Bitcoin. Of course it's not anti-Bitcoin. If I was concerned about Bitcoin as a competitor, probably the best thing I could do is let it continue on its path. This is just not sustainable. This is just not on a sustainable path. So I don't know. I've just been told for so long that Bitcoin is a proof of work. And for it to be worth what it is, it needs to have something that costs money to produce it. But proof of stake for Ethereum, when it gets here, it may be worth it. The network's environmental impact has been a subject of debate for many years. However, the growing community devotees, including miners and developers, so far rejected any proposed changes to the system designed by Satoshi Nakamoto, the anonymous inventor of Bitcoin. So right now, it's just more of a thought. But let me tell you, I saw it here, also here. Again, same information, talking about Chris Larsen's interview. So Chris Larsen is worth $3.4 billion according to Forbes' billionaire list. He's the executive chairman and co-founder of Ripple, which supports XRP. Larsen and another executive in 2020 allegedly raised $1.3 billion for unregistered ongoing digital asset securities. That's actually talking about the SEC regulations there. So whether the campaign will work is a different story. Bitcoin miners earned more than $15 billion last year, according to data from the Block Research. This would have to be given incentives. Okay. The miners would have to be given incentives to switch. Shifting to proof of stake is technologically complex, and it has taken Ethereum years to develop and to test the code necessary for the change. Perhaps more importantly, many Bitcoin diehards are adamant against changing the system created by Satoshi Nakamoto. Some of its borders on religion. I won't get into that. So that's another article. And again, here is another article about it also. So it looks like they're definitely trying to put it out there and kind of get a feel. That's what it is. They're putting it out there and they're trying to get a feel of what we all think about it. If only 30 people, the key miners, exchanges, and core developers who build and contribute to Bitcoin's code agreed to reinvent proof-of-work mining or move to a low-energy protocol, Bitcoin would stop polluting the planet. Man, I just don't know if they're really polluting it. I can't really have an opinion on that because I don't feel like I know enough about it. So that is your Bitcoin green energy proof of work to proof of stake news. And let's move on. Terra Luna set new highs of nearly 106. Terra Luna's tokens rose 10% in the past 24 hours to set new all-time highs of over $105, daily shows. Luna breaches a previous high of $104.74 from earlier this month. Luna is one of the two native tokens of the Terra network, a framework that allows developers to create custom blockchains and build their own decentralized applications on top of Terra for various use cases. Sentiment for Luna has grown in the past month, largely due to the Luna Foundation Guard, a Singapore-based nonprofit that is purchasing over $3 billion, with a B, billion dollars worth of Bitcoin as an additional layer of security to the UST, as in Terra, decentralized dollar peg stablecoin. So Terra Luna is adding to their fund. It is increasing the value of Luna, and it has a lot to do with the Luna token buying Bitcoin and adding it to their UST coin, which is their stable coin. The LFG, which is the Luna Foundation Guard, demand for Bitcoin has led to a recovery in the past week. Bitcoin breached the $47,000 level yesterday, the highest level since the start of the year. If you guys have not been paying attention to Bitcoin, just so you know, we are up. We're at 47,000. Ethereum's at 3,400. And Terra, of course, is at $104. It's looking good. Very, very happy to hear this. Everything right this very second, for the most part, is going up. And that is your Terra Luna news. Up next, Shiba Inu, Solana token lead gains as Bitcoin hovers around 47,000. Bitcoin held over $47,000 mark during the European hours on Monday, following a surge from Sunday's $44,700 level, leading to a broader recovery and a 5.4% addition, or 100 billion, to the overall capitalization of the crypto markets. Some fund attributed Bitcoin's surge to demand generated by Luna Foundation. The Luna Foundation Guard intends to accumulate $3 billion in Bitcoin as a reserve for Terra USD. Almost like I've already gone over this, sorry. Major cryptocurrencies displayed gains after over 2 weeks of staying flat. Solana jumped 14%, while similar gains were seen by Shiba Inu and Polkadot tokens. Solana set monthly highs of $110, while Shiba was touching distances of its monthly highs of 0.00002788. So everything's going up right this second. Traders say $50,000 is the next target for Bitcoin. I hope that they are correct. Last but not least, at least for today, this is the last one. MicroStrategy's unit gives $205 million collateral loan from Silvergate to buy Bitcoin. So, MicroStrategy, a subsidiary of MicroStrategy, has received a $205 million term loan from crypto payment provider Silvergate Bank. The loan was given through the Silvergate Exchange Network leverage program, which issues US dollar loans using Bitcoin as collateral. The loan was collateralized with approximately $820 million worth of Bitcoin, according to the regulatory filing. Shares of MicroStrategy were flat during the pre-market trading. Business intelligence software company MicroStrategy has become known more for its embrace of Bitcoin. In the fourth quarter, the company had to take a nearly $150 million impairment charge on its Bitcoin holdings due to the price drop. All right, so they lost a few dollars. But they didn't lose because their average price is around $30,000 for Bitcoin, so they're doing good. The interest-only loan is secured by a certain portion of Bitcoin held in MicroStrategy's collateral account, which has a custodian agreed upon by both parties. MicroStrategy can use the loan to purchase Bitcoins, pay off interest, or fees related to the loan on the MicroStrategy general corporate needs. Okay, so they can use the money for whatever they want. Apparently, loans have fees. So I'm sure it's a high fee that they're paying. So they're using some of that money to pay off some of these loan fees, and they can really pretty much use it for whatever general purpose is needed. So, launched in 2020, Silvergate's SEN leverage program had $570 million in commitments at the end of the year, according to the press release. The SEN leveraged loan gives us an opportunity to further our position as the leading public company investor in Bitcoin, says Michael Saylor in the press release. Using the capital from the loan, we're effectively turning our Bitcoin into productive collateral, which allows us to further execute against our business strategy. I agree with everything that MicroStrategy says. Michael Saylor is a personal hero of mine, and you should listen to everything that that man says, because he is so much smarter than I or anyone I know will ever be. So to end today's video, I would like to give you a minute or two of Michael Saylor having a talk with Tom Bellew. And here is what he has to say about Bitcoin. Thank you very much, guys. Like and subscribe, and have a wonderful day.
The overall energy generated in the economy is like 160,000 terawatt hours, and the wasted energy is 50,000 terawatt hours, and Bitcoin is 120 out of 50,000 wasted energy. So it really is insignificant as an energy load on the environment. But if you dig a bit deeper, you'll find that actually Bitcoin is much cleaner energy than all the rest of the applications. Cars, planes, trains, automobiles. It's pretty obvious planes use fossil fuels. There's no hope for them not to. Bitcoin doesn't. Bitcoin is actually something that runs on electricity. It doesn't run on fossil fuels. You know, most cars still use fossil fuels, and even electric cars are charged at charging stations that are charged with fossil fuels. So the environmentalists ultimately are going to focus upon the energy grid, and if they want to shut down fossil fuels or change the energy mix away from coal or something, they'll do that. Bitcoin is the highest value application of energy on a wholesale basis that we have in the world. There's nothing more valuable. There's no more valuable use of energy than Bitcoin. The latest generation of SHA-256 miners, they will generate almost 45 cents a kilowatt hour in value, which means you can take them anywhere on Earth to the North Pole. You can put a nuclear reactor on the North Pole and run Bitcoin mining from it. You can plug them into wind generators 1,000 miles out into a desert. You can plug them into geothermal on an island like Iceland, and you can generate 45 cents a kilowatt hour. The typical residential electricity cost is 13 cents a kilowatt hour. Industrial usage in the first world is 11 cents a kilowatt hour. And all of that energy has to be co-located with the factories and the people.